As the local real estate sector is struggling with a wide range of challenges, the emergence of COVID-19 presented a big blow to the sector's viability. Meanwhile, as the sector is now slowly recuperating, key players in the local real estate industry converged to explore real estate dynamics and emerging trends in the local real estate industry.
I will begin by a background of what has really happened to the economic cycle due to the COVID-19. I know we want to look forward, but before we come up with solutions, we have to identify where we are currently. The housing market has really been challenged. Sustainability of housing finance business has also been challenged. I would want to give a brief background in line with the unvirtuous economic cycle, which resulted from the COVID pandemic. We noticed that there has been declining revenues within corporates, within the market, which has led to business laying off workers. We have seen a lot of institutions retrenching. We have also seen a decline in household affordability of goods, property, and housing-related products. If you look at the pandemic, during the pandemic, a lot of people were facing challenges in terms of paying their rentals. Their savings got depleted, and this is the type of market that we want to offer housing finance to. We move on to housing finance challenges post-COVID. As mortgage financiers, we are faced with an affordability riddle. Housing supply is on the decline. It's actually costly for a normal low-income earner. What does it mean for us housing financiers? We do have a backlog in terms of housing, delivery of housing, which is hovering about 2 million, but we face an affordability riddle, wherein our targeted markets, the low-income earner is not affording the products that we are presenting to the market. We are faced with a hyperinflationary environment, wherein if you want to purchase perhaps building material or even property, sellers are not accepting local currency, and if you get a quotation today, by end of day tomorrow, that quotation would have changed. So how then do we finance in such a market? We are also faced with high interest rates, and they are oscillating between 60% and 70% for the mortgages, which then becomes a bit punitive for a prospective homeowner. How then do we support the market at such challenges?
In line to the sector's global trends, there is considerable need to adapt new technologies in the local real estate industry. This was according to the president of the Institute of Architects.
Technology has changed nearly everything about the way that people in society exist and function, from smartphones to the internet. Technology has transformed the world in just a few decades' time. For architects and home users and builders and designers, technology has taken a front seat in the experience of designing and building a structure. From start to finish, technology affects the way that architects design their buildings. And I'm sure that we've all embraced technology during these COVID-19 times. whether reluctantly or because we wanted to, because it has assisted us to continue with our daily lives, working virtually or remotely. So as I was talking about the technology, it can improve building efficiency and durability while making it easier for architects to more accurately render a building design. We then move on to, I think, one of the biggest trending technologies within our industry, which is the 3D printing machines, and they make buildings better. But I must say that 3D printing machines can print basically anything, so it doesn't necessarily have to be limited to our industry. So you may have heard about 3D printing machines, making small parts for machines. What you may not realize is that 3D printing can be applied to structures on a much larger scale.
According to Privilege Zanangwe's presentation, there is a need for housing financiers to also adapt new trends in the housing finance market, particularly the mortgages market.
We move on to the emerging trends that are there post-COVID. I believe as housing financiers, we are supposed to adopt to the new norm. We have to understand the market. The characteristic of the mortgage market currently is what we then define as the emerging trends. I'll speak on property sellers who are not keen on mortgages, but we want to reintroduce mortgages to the market. Why are property sellers not keen on mortgages? They complain that it takes time to get a mortgage. And at times, the process is too long. By the time you want to pay the seller, they would have lost real value from their property. So what do sellers do? They will not accept a mortgage. And yet, financiers still want to remain in business. We are also posed with a trend where sellers are asking for payment in hard currency, and yet we are financing in local currency. This is a trend that we are facing currently. Our targeted market is still earning in local currency, which then also culminates to affordability scenarios. Mortgage tenures are also not going beyond 10 years, which means maximum mortgage limits are then lower compared to if we're going for 25-year normal mortgage tenures. With shorter tenures, it means that monthly repayments tend to be high. At first, perhaps beneficiaries might benefit, but the repayments will likely turn into NPLs.
The Real Estate Institute is a member-driven organization formed in 1945. REIZ exists to enhance the provision of resources to the real estate practitioner for sustainable, value-added service provision benchmarked to global standards, supported by the motto, which is integrity above all. And its core values include professionalism, integrity, teamwork, and innovativeness. REIZ offers two core functions, the first one being education and training. We offer continuous professional development for our members through workshops and seminars conducted throughout the year. Our research department also provides credible and well-researched data benchmarked to international best practices. You can contact us on 242-788-395 up to 7. Our website is www.reiz.ac.zw. You can also visit our offices located at Newlands Shopping Complex, Office 17, Monterey Post Building.
On a broader housing policy position, the Harare City Council Communications Manager, Mr. Michael Chideme, presented on the existing housing policies in Zimbabwe.
Decent and adequate housing gives families peace of mind. Investing in housing guarantees security and ensures families continued housing security and comfort in the event of the demise of the breadwinner. This is a realization at council that people need this security, so people should be accorded or afforded the right to own property in the city. In other economies, housing is served as an engine of growth. According to one Richard Green's in his study of business cycles, he says housing leads the business cycle ahead of all other investments. Housing has a multiplier effect on the other aspects of the economy as it promotes the growth of the building material supply value chain. Good and vibrant housing policies that are people-centric will always find favor with the beneficiaries. Real estate is big business and should remain so for local authorities. More social housing is cheaper to rent and guarantees councils that there will always be workforce to drive the local economy. This is primarily the reason why, for example, in Harare, social housing was introduced. It was for the rental and security of habitation by the laborers who had come to work in the city's various industries. What largely remains in social housing are now the 58 Mbare hostels. I think this is an area that we need to look at as people in the real estate and as we advocate for more social housing. What happened is most of the houses were sold over the years to sitting tenants. So some of the houses were sold to sitting tenants. The effect of such a decision reduced the city's rented institutional housing stock. The housing stock formed the council's bankable properties that could be used when borrowing funds from banks to achieve different projects. Right now, if we go to the banks, they'll ask us, what do we have? They want to know, they are giving us money against what? What can they get in future in case that we default on the payment of their loans? So this housing stock was there for a specific reason, and also to guarantee that workers who came to Harare would have accommodation. So I think it's a policy that needs to be revisited and maintained so that there are people who don't want to own houses, who know they are mobile workers. They want to come and work in Harare for 3 years, but they have a house in Bulawayo, they have a house in their rural areas, but they just want to come here and work, and then just rent. But that social housing is no longer there, so to say. Companies, including councils, provide accommodation referred to as tied accommodation so that they can retain skilled workforce. These are some of the policies that need to be constantly promoted if Zimbabwe is to retain its skilled workforce. If you listen to the stories of the nurses as they leave Zimbabwe, it's not only about the dollar in their pocket, it's also on accommodation. I can't afford rent, I don't have anywhere to stay, so I would rather go elsewhere. So our workforce is also leaving the country because there is no company-tied accommodation. Paranyatwa Hospital should have houses for its nurses. So should Chitumbisa Hospital, so should the Harare Hospital, so should be our own Wilkins. There should be institutional housing that ties our workers to continuously give their skills to the city and to the country as a whole.
As part of the workshop recommendations, there is considerable or ample need in bringing up innovative housing finance in the local housing finance market.
How then do we bring a solution within the housing finance market? I believe a robust and inclusive housing finance system that offers diverse housing finance products and is supported by effective policies and stimulus measures can be a bridging measure. Innovations are also key, and within the housing market, we already have a housing backlog that is hovering around 2 million. So it means we are still in business. The business has been challenged, so we need innovation. We will take these challenges as a stepping stone so that we continue providing affordable housing through our innovative products, which I will share as we go on. Broadened mortgage credit products and financial intermediaries and funding techniques need to be presented. Financial innovation need to be implemented in different areas of the housing finance market and not only by the mortgage financiers. We look at the regulatory environment frameworks. I'm happy the city fathers are here. I'm happy the president is also here to help us have this modified to increase more mortgage market depth. Funding sources and financial intermediaries have to be expanded. Public and private intermediaries have also introduced new mortgage products as well as programs. This leads me to the innovations that we have pioneered in the market as National Building Society, as well as other financial institutions which are also trying to make sure that delivery and management of affordable housing and viability to low-income earners is a reality.
According to Mr. Michael Chideme, the time is now to invest in the local real estate industry given the existing opportunities.
Zimbabwe is losing skilled workers to other economies in some instances because there's no accommodation, either owned, rented, or retired. Workers simply want a roof over their heads. You may be wondering why I've said the above statements. You, as the Real Institute of Zimbabwe, have the potential to change Harare in Zimbabwe. We are all aware of the huge appetite by locals to own property. The time is now to invest in the property sector, taking advantage of the mixed use models that allow the coexistence of housing and attended amenities. As land is becoming scarce, we should think of developing flats. Okay, I think I'll explain a little bit here. I don't know whether many of you are aware of the development corridors that have been approved at council. I'll give you the examples of the development corridors. The formerly Enterprise Idim Nangagwa Road going to Mrewa Mtoko is a development corridor. I'll explain what that means for those who might not have heard about it. Second Street Extension, Loma Gundi, Simon Mazoroze, Samora Machel East and West. Right. Development corridors and Mtare Road. It means the previous use, which was predominantly residential, is being relaxed so that they can be mixed use in those along those major thoroughfares. So the distance from the center of the road is 250 meters either side of the road. So it's 500 meters either, or in area of 500 meters. So 250 this side, 250 the other side. So people with properties along those major thoroughfares can now have mixed developments. Like you see right now along Idim Nangagwa Road, at the corner of Aksuras and Idim Nangagwa Road, there's a development taking place, that new shopping mall. It's as a result of the review of the local development plan for that area. So this is an opportunity for the real estate industry, for those with their monies, to also buy properties along those major thoroughfares or partner the owners of those properties and build going up. We were discussing when I got in, somebody raised an issue that they were not happy with the limit of floors that have been allowed on some of those corridors. The opportunity is there for you, ladies and gentlemen, to approach the city and say, yes, we appreciate what you have done, but we're not happy with the height or the number of floors that we have allowed. Can we not go much higher because the land is not there? Land is a resource that we cannot recreate once you use it, and so we have to constantly review our local development plans to make sure that we redo the areas and maybe build going upwards. But I think that's an area that people can now also look at. As we do our budget formulations, I think we recommend as well to council that can we engage the Real Estate Institute of Zimbabwe so that your input into the city budget is also factored in.
The Real Estate Institute is a member-driven organization formed in 1945. REIZ exists to enhance the provision of resources to the real estate practitioner for sustainable, value-added service provision benchmarked to global standards, supported by the motto, which is integrity above all. And its core values include professionalism, integrity, teamwork, and innovativeness. REIZ offers two core functions, the first one being education and training. We offer continuous professional development for our members through workshops and seminars conducted throughout the year. Our research department also provides credible and well-researched data benchmarked to international best practices. You can contact us on 242-788-395 up to 7. Our website is www.reiz.ac.zw. You can also visit our offices located at Newlands Shopping Complex, Office 17, Monterey Post Building.